It is a pleasure to have you back. Good morning.
It's a great pleasure to be here. Thank you.
You've written a lot today about the importance of the 4,200 level, Apple and Amazon, the VIX. What's the headline this morning?
Well, I think the whipsaw action was two-pronged, as it were. As you alluded to, the yield on the 10-year moved up to 298, and that spooked them a little bit this morning. It has now paused, and that's given them a sense of relief. Secondarily, we're looking at two stocks in particular, Amazon, to see if it resumes that sell-off, and number two, Apple, which, if it gets down to about 154 or even worse to 150, will be a problem. We retested the lows, the February 24th low in the S&P was 41.14. We came awfully close this morning. The Dow is something like 32,272. We didn't get quite that close in the Dow. And, of course, NASDAQ the other day broke through it. So you've got the cocktail napkin technicals working. On the other side, on behalf of the bulls, it's new money for a new month. So you've got that. And secondarily, you're moving into a Fed decision on Wednesday, and there is the so-called Fed drift, which is the bias of the market to trade slightly higher in the 36 hours before the Fed decision. So the bulls have those two things working on them. The bears are got the nervousness over the yields and the fact that we've got to stay above the February lows.
Right. Yeah, which we did notice that this morning. You do say this morning we may need a washout, in essence, an 8 or 9 to 1 down day with the VIX spiking to 38 or maybe 40. Did Friday not qualify on some of those ideas?
It came close, but it missed on several levels. We didn't get the VIX quite high enough, and the selling kind of started a little bit late. You know, the bleeding and pain felt real, but
yeah.
Amazon went down, and then it broke below its chart level, the previous low, and that brought out sellers. I know a lot of people think that's all hocus pocus, etc. But having done this for 60 years, I know people watch levels. Charting is simply, I bought it here and I made money. Maybe I'll put a bid in to buy it there again. Or I held it here and it failed on me, so I don't want to overstay my welcome. So it's really psychological. It's not magic of pencil lines on paper, but the technical chart action is very important to traders.
Meanwhile, Art, we're moving into May, and every year at this time, we're reminded of the axiom, sell in May. It is statistically the worst 6 months of the year. Do you think seasonality is going to be as pronounced this year?
Yes, I do, although a caution, the first 5 trading days of May are not necessarily difficult on a seasonal basis. Often, and this is usually when April is a decent month, that the seasonality of an up-moving end of April carries over for the first week of May. So we may not have quick pressure. The other thing I would remind you is this is a midterm election. Midterm elections tend to bottom at the end of summer, out around August. So I think this choppiness is going to remain with us. I think we've got a little bit more work to do on the downside. I know the viewers don't want to hear that, but it is what it looks to be to me.
Right. Anything that Powell can say in the presser that would continue to give him optionality down the road, but would lighten up on the sentiment that's been trounced last couple of weeks?
Yeah, I think what the market is going to begin to focus on is the balance sheet. As I've said before on your program, Powell has a bit of a problem. He kept dismissing inflation as being transitory. It is not proven to be that transitory, and therefore, out of guilt or embarrassment or whatever, Powell is therefore committed. He's putting on his Volcker hat now, so he's going to be tough on the rates. But what I'm going to be listening for is, are we moving to qualitative tightening? Yes, they're not going to be buying. How much are they not going to buy? Are we going to see a drop in background liquidity of $60 billion a month? There are some who estimate $95 billion a month. That will be very, very difficult for the market to handle.